All right, everybody. A very good afternoon to all of you. I hope you guys are all enjoying your weekends. It is, of course, a Sunday, and as usual, we will go through some of the key events we had last week, and also we will look for some macro events coming from Monday to Friday. So as always, we will go through a rundown from last week, starting from 11th of November 2024, ending up Friday 15th of November 2024. So before we begin, I just wanna say that it was all about U.S. elections we had on November 5th. Uh, if I quickly pop up on my screen, here it is congressional elections, and we are well aware that what was the outcome of this event. Out of this event, we have seen a nice push higher in equities, as we can see. S&P just showed us quick ran up almost 5%. And if we look at the Nasdaq, same story here, close to 5% run up from 20,000 and 100 level to 21,270 level. It's almost around about 6% move. Uh, Looking at gold, clearly was dominated by the stronger dollar we had. Uh, so right over here, the election results we started seeing, and we saw a nice push up higher, heading toward 107 level, and it has shown some of the resistance over there, and we are currently marginally away from 107.326 level, which goes back to October 5th 2023. So all I'm trying to say here is that after the US congressional elections, market was kind of trying to figure it out, that how long the impact of this election will take place. Uh, uh, it doesn't matter if it comes to equities. It doesn't matter if it uh, comes to the comes to commodities. Doesn't matter. It comes to the currencies. So overall, after November 5th, market was just disregarding these macro events we were having, and completely trying to shift or hedging themselves against the uncertainties laying ahead after these US, or let's just say after that Trump victory. Now, after that, in the next week, we haven't had much, to be honest. We had CPI. We will touch on that later. Uh, Other than that, we haven't had much. We had a Fed Chair Powell coming out, gave pretty much nice volatility to the markets. We will touch on that also. Uh, Other than that, it was a very quiet week we had, and also with the U.S. elections we had, and with the results market, it was really hard to navigate what is actually driving these moves. So let's start with Monday. Without wasting over much of the time, I think discussing about Monday is just waste of time. We had a holiday across the major banks. USD, CAD, Euro, all of the major banks was closed on that day. So uh, moving forward to Tuesday, we had labor data came out from UK. So just a quick reminder that currently the Bank of England can't actually rely on this data, because ONS is saying that we are having a issue with collecting the data from their surveys. Uh, so with that, it gets harder job for it makes their job harder for Bank of England to navigate, or let's just say get any clue out of this data, or which way, let's just say in scenario one, they cut their interest rate, and later they found out that the market wasn't or deteriorating, or let's just say it has deteriorated very fast, and they did not cut their rates, and it's gonna be a mess. So that was the reason trading these event becomes tricky, because Bank of England and ONS already stating that they are having issues with the to rely on this data. So with that, unemployment rate ticked up from 4.3%. And here is a quick note I have over here. Let me just bring that up on the screen. Bank of England commentary here. So, okay. So, uh, if we look at the UK unemployment rate, we had a 4.3% here. And if we look here at the forecast, or at the summary of Bank of England projections, we can see that 4.3%. Uh, 4.3% is what they were projecting by the end of 2026, and we are already there. 4.3% is what we had. It was a pretty much mixed bag across the board. However, we can see that with this huge tick up in the unemployment rate can create some panic in the in Bank of England, that they might be running behind the curve. So as there were are reliable issues, but we can see that the unemployment rate already hitting their 2026 quarter four target. It can push the bank, maybe at some way, that they start thinking that, hey, we need to cut rate more aggressively than they are doing right now. So with that, other than that, we had some commentary from FOMC Waller. We had some commentary from Barkin, from Kashkari, Harker, Barkin. I mean, they didn't give us much of the clue that what they are thinking about their December meeting. Is they gonna cut their interest rate? They're gonna hold the interest rate? They just said they didn't give us any clue, to be honest. So. Moving to Wednesday, this day was, I mean, I was personally looking for this day because of inflation figures we were expected to get around 9:30 Atlantic Standard Time. So, you guys, you're not gonna believe that we got exactly the number the market was consensus. So 0.3 is what was consensus. 0.3, it actually came 0.2, 0.2. 2.6 year of year. I mean, it was perfectly aligned with the market expectations. But if we look at the graph over here, you will see that there is a nice little tick up higher to 2.6 from 2.4. But as I have said a number of times, it was already priced in. So there wasn't any tradable opportunities we got out of this event. I was eventually looking for dollar buying because of the Trump victory. I was looking that even though if we get a miss in the data, I would have gone for like uh, a buying at a better price. And if we could have got a nice beat in the data, I still would have bought immediately. But unfortunately, the data is just did not provide any of the firework on that day, so it was pretty disappointing. Uh, we had a comment from Governor Bullock, and if I recall myself, that on on that day, 14th of November, yes. So the commentary was pretty much neutral. We is The governor Bullock says think we are restrictive enough and will stay there until confident on inflation. Uh, the RBA is trying to stay very much hawkish in their tune and also being restrictive. They are not they This is the only bank that is not cutting their interest rate. However, other than that, even though US has started cutting their rates, but this bank is just sticking to the ground and saying that, hey, we are not still confident that inflation is heading or even moving fast enough that they become confident in reducing or losing their monetary policy. So other than that, we already knew it, and that's why I highlighted it neutral, even though the commentary was hawkish enough. But in the current scenario of RBA, this commentary will lies in a neutral stance. So back to the calendar, we had labor data out of Australia, pretty much disappointing, with the employment change 15.9K, and the number got revised 64 down to 61K. Pretty bad figures overall, but unemployment stayed the same. uh, I can't recall on myself that we have seen any reaction of this data, but I do remember that it was counted as pretty much bearish for the currency. With that being said, Thursday we had core PPI and labor data unemployment claims coming out from USA. It is again perfectly clean, came in line with the market consensus. However, unemployment rates tick lower, 217K, pretty much healthy territory. It is staying in there, even though I don't know, it's just there in a healthy territory. If I mean, I will get surprised if it just shows above around 300. I mean, boom, there's the money. So even though if it just goes below 200, even just below to 290, between 200 to 150, we can have really good trade out of this unemployment claim. But staying between 200 and 250 is not something that can create any sort of volatility in the market. Other than that, President Lagarde, uh, man, she is such a boring person. She became like, I mean, I have no words for her. Uh, Overall, her commentary stays neutral. After last meeting, where she seems worried about the PMI's figures that that was coming softer than expected. She also seems worried about the growth, and after that. Uh, we had commentary on 20 commentary from Lagarde 22nd of October. Pretty much, I don't see any commentary on further rate movements. Seems clearly they're stating that she wants to stay data dependent. That's why she's trying to just staying to the data dependent, which clearly does not provide any edge uh, when it comes to trading. So coming back to the 31st of October, she on that day still did not provided major any of the major macro or monetary policy guidance. She did not provide it, so clearly neutral stance. That's what I have stated here. Other than that, I don't have record for 14th of November. So what does that mean? That we haven't had any commentary from President Lagarde on that day. So Bank of England, Bailey, we will talk about later, but let's just talk about Powell. I mean, Powell was really hawkish on that day when he came out and said Fed chair policies, the economy is now sending signals that the Fed needs to be in a hurry to lower interest rate. This is what fueled up in the equities. Like there was a total disaster in equities after his comments. I mean, the market was thinking that after Trump's victory, there are chances that Fed will cut slowly at a slower pace, which eventually helping the dollar to push higher. And they were also positive about the equities that with the corporate tax is on the list of one of the Trump's policies that he want to reduce that from I think from 21 to 18%, which will eventually have the help the equities to push higher. And that's what we saw after the Trump's victory, a huge push up, reaching all-time highs. S&P 500 hitting the target of 6,000 level. uh, but after the comment from Jerome Powell stating that the economy is not in a hurry, or let's just say it's not sending signals that the Fed needs to be in a hurry to lower interest rates. The tone is balanced with slight hawkish, still indicating that rate cuts are unlikely in the near term, and the Fed is committed to staying vigilant on inflation. So there was a sell-off, as clearly we are seeing on the screen. Uh, the market is just scared that the if Fed does not cut their rates on this December meeting, it can create some sort of a fear that they are taking too long to cut the rates, and eventually they might can call the recession. So it's always about recession fears when interest rate is sticking higher than expected. So the Powell really sparked and the day and the sell-off risk on environment what he created on that day, and the risk of flows goes on till Friday. And Other than that, we had UK GDP numbers coming out, and when it comes to UK GDP numbers, I mean it was ugly numbers. I don't have other than that to say it was a really ugly number. Bank of England's GDP month-on-month came negative 0.1%, and their preliminary quarter came 0.1%, and their year-of-year coming 1% growth. So let me just pull up the Bank of England's rate decisions, and if I get you there, look at the GDP 2024 quarter four. They are thinking that their economy gonna land between 2 to 1.7% by the end of 2024. But with the current pace of growth sitting at 1%, and we are already in November. So even though the data is lagging, it was from a last quarter, but still 1.7% seems very far from current summary of Bank of projections. So eventually created a nice sell-off in pound, and we had seen, let me just show you guys, a nice sell-off in GJ. I mean, clearly to around 2% move, 370 pips there. So it was a classic move to the downside when we have a risk off environment with negative data coming out from UK, clearly fueled up breaking those resistance levels sitting at 195 levels, and reaching close to 193 level. So it was a nice move, but eventually I wasn't at the desk, so we missed it. Anyway, so that was a week we had. I mean, lot of ups and downs, but with no clear catalyst. With the U.S. elections results, the market was clearly don't know how big the Trump policies will impact the markets. It's just everybody is trying to hedge their positions. With Powell's coming out and saying being hawkish and the UK numbers being so ugly, uh, have had created some volatility, but unfortunately, I wasn't there to catch those movements. Now, let's talk about the week ahead. Sunday, nothing major. We're gonna have Bank of Japan Governor Ueda speaking on Monday, but I mean, this is the bank I think that does not have a watch in their ministry. Like every central bank across major G7 countries give their designated time, that what time they're gonna come out and gonna give their speech. But this Bank of Japan members, they are always like to surprise the market. That's what they do. So we don't have a time for Bank of Japan at what time he's gonna come out. He's just gonna come out, and we hope that he gave us some clue. If I show you his last commentary, I think he failed to give us any sort of a clue. Uh, Governor Ueda here is. Uh, so as you can see, he does not give us any clue which way he wants to go. He's just staying neutral, data dependent, which is really disappointing. But there is a one thing. This bank on his last meeting, even though did not provide any surprisingly major key points, but across major countries, the bank central banks try to stay independent. But when it comes to Japan, this bank is highly influenced by the politics. The current prime minister, I think that's the prime minister, uh, yeah, Ishiba. So after the victory of Ishiba, she was like, "Oh, we will consider delivering a pay or low income households impacting by raising living costs, and will pursue fiscal policy which places the highest priority on ending deflation." Her comments was very much hawkish, and just a day after, look at that, a day before she was being hawkish on a day, October 2nd, she just came out and said, "We are not in an environment for an additional rate hike." I mean, you kidding me? You are the person saying that you want to increase the wages, the payouts, so the low house income households can rise their living standards and they can end the deflation. But eventually, next day, you're coming out and saying that the bank is not in an environment for additional rate hike. This is just out of my mind. So with that, this bank is highly, as I said, influenced by the politics. Uh, Ueda is not, I think, gonna give us any clue as he has done in his major commentary days. So I'm not expecting any fireworks from him. Other than that, Tuesday we are having a CPI coming out, and this let me just show you this calendar from Forex Live. So year of year CPI expected to tick up 1.9%, and with the current expectations of Bank of Canada to reduce their policy rate by 50 basis point, uh, I think if we see a miss in a CPI number, we can assume that the bank will or can go for 50 basis point cuts. If it ticks up, like just a 2.1, really a whopper number, then we can expect that there can be a 25 basis point of cut on the table. But hey, still they're gonna be a cut. If it's not gonna be 50 basis point cut, they're gonna be a 25 basis points of cut. We're gonna have a monetary policy hearing in UK, in which uh, I think the Bank of England governor and several MPC members testify on inflation and the economic outlook. before Parliament's Treasury Committee. So we will expect some of the commentary from Bank of England Bailey and other MPC members. We will look for what sort of commentary we can get. Other than that, the one data coming out from China is the loan prime rate, 1 year and 5 years. Market expectation is that there is no change. So if they reduce their LPR, we can see some of the movements in China 50. Uh, okay, so remember the stimulus measure they announced, which eventually surprised the market and has seen a huge one-side volatility. And after that, the market created some sort of a high thought that they will provide more stimulus, but eventually after that they did not came out and gave us any fiscal stimulus, so which gave us 50% move. If we go to the Fibonacci retracement, and I think it was close to 50%. Yeah. So if we get lower LPR, and for 1 year and 5 year, we can expect some of the upside in the China A50. Pound inflation figures. Again, the bank is currently expected to reduce their rate. I think how much it was. Bank of England. So the Bank of England is expected the market is currently expecting that they will hold their interest rate by four by I think the current rate is 4% of Bank of England anyway. So the expectation is they're gonna hold. Any hawkish CPI numbers won't create much of a reaction that can a dovish one. So I will look for a miss in UK inflation figures. Uh, President Lagarde, as I said, I'm not expecting much as she has failed to provide any clue, failed to provide any future guidance. So, not very excited. She's gonna come out and give us any fireworks. Ueda again expected to speak on Thursday without any time. So I don't know when he's gonna speak. Bullock, same thing. I already have shown you that Bullock has also is gonna stay hawkish eventually. The key point here is to look if Governor Bullock comes out and choose to stay in dovish. So that's what can create some volatility. Labor numbers again. I have stated. I mean, I will get surprised if it gets lower 200K, lower than that, or close to how much. Okay, I will I will say close to 300. That's the number that can make me think that okay, it is worth to put my capital on to create some gains on it. Other than that, I will try to stay patient on this data. uh, we are having plenty of Fed speakers, Goolsbee, Hammack, Barr, but as usual, their commentary does not weight as FOMC Waller, FOMC Fed speaker Chair Powell holds. So uh, eventually, I don't think so. They can create much of the volatility in the markets. Last day of the trading session, we are having preliminary manufacturing services PMI from Eurozone, from UK, and from US. Something to have an eye on. I mean, this data has been very volatile and helped us to have some bucks on our pocket on the table. So I will look on this data. I will keep an eye on, and I if we still don't have consensus for US manufacturer PMIs, but we will get that throughout the week. So with that, the major highlighted events I will be looking Governor Ueda on Monday, what he has to say, a monetary policy hearing, anything special, Bank of Monetary Policy Committee, any member says, CPI, I just forgot about it. China LPR, if they lower the interest rate, and labor data, any miss, I will look for that. Bank of Japan again. I will keep an eye on Bullock and Ueda. Unemployment claims, if it really come in deviation. Uh, on last day, I will look for flash manufacturing PMIs and services numbers, and if so, I will try to wake up early and will go through this day's manufacturing and services PMIs coming from Eurozone. So with that being said, you guys all have a great week ahead, and as always, if you have any questions, don't hesitate to let me know.